If you just recently formed an LLC, then you might be wondering, how exactly do I pay myself out of this LLC anyway? That's what we're going to be talking about today. Ready? Let's do this. Hey everybody, welcome back to the channel. If you're new here, my name is Jim Hart. I am a trademark lawyer and online entrepreneur, and I teach people how to start, build, grow, and of course, legally protect their own online business so they can live with freedom where they want, how they want, and work whenever they want. And today what I want to do is I want to talk to you about how to pay yourself if you just set up your own LLC. Or maybe you don't have an LLC yet, you're still a sole proprietor and you're still wondering, well, is it kosher to just kind of take money out of my business account? Can I spend money out of my business account? How does that all work? And that's what we're going to be talking about today. So I started my first law firm way back in 2005. It's hard to believe it's been almost 20 years, but up until that point, I, like most of you, was working at a job. And at that job, they gave you a paycheck, and in that paycheck, they took out your taxes and your benefits and different things like that. And you didn't have to worry about actually paying yourself money because you got the check from that job. So once you start your own business and you're not solely reliant on a paycheck from a job, the question becomes, how do you do that anyway? How do you pay yourself? I mean, can you just write yourself a check? Who's going to take care of all those taxes? How does that happen? Do you need a payroll service provider? Can you just pay all your bills out of your business account? I mean, what is the deal? How does this actually work? And then, and this is probably even more important, you have to determine how much are you actually going to pay yourself? How do you figure that out? How do you minimize your tax liabilities? How do you know that you're doing all this right? We're going to be talking about all these things today in this video. So this is going to be value packed. You want to make sure you stay till the end. Now, maybe you can relate to some of these questions. I mean, business wasn't supposed to be this hard, was it? I'll be honest with you. I used to struggle with all these questions, and then I figured out that paying yourself isn't actually that difficult if you do it the right way. And as a result, I never had to worry about paying myself again. I mean, you have to worry about bringing in the clients and making the sales and things like that, but how to pay yourself slowly became something you just don't have to worry about. And today what I'm going to do is I'm going to share with you my 3-step approach to making sure that you're paying yourself the right way in your business so that you never have to worry about how much or when to pay yourself ever again. And so the first thing you need to do is you need to decide what level is your business at. And depending on the level that your business is at, it's going to dictate how much you're actually going to pay yourself. And so are you a startup who's just not making any money at all or making very little money? Then if you're at that point, you're going to pay yourself one level. If you're at level 2, which I would call up to $40,000 to $50,000 per year in revenue, then you're at a different level and you're going to look at how you pay yourself a little bit differently. And then if you're at level 3, which is you're making more than $50,000 a year in net profit, you're going to pay yourself a little bit differently. And we're going to go through each one of those levels here in the next few minutes. So if you're at level 1, which means you're a startup and you're just getting going, you don't have a lot of income coming from the business, then it makes it easy. You're not going to be paying yourself a huge exorbitant salary because frankly, you just don't have the money to do that. So if you're just starting out and your business is barely making any money, then that's fine. Then what you're going to be doing at this point is you're probably going to be taking most of your excess income from your day job and you're going to be putting it into your business to help grow your online business. And fortunately for you, an online business costs very little to start and set up. And so really what you're going to be doing is you're going to be doing a lot of sweat equity at this point. You're going to be building content, creating a website, creating products, and going out there networking with people and trying to find customers that would then buy those products. That's what you're going to be doing at this point if you're just getting started. If you can start an online business for under probably $1,000, and all you really need is a website, an email list, and that's pretty much it. Maybe a camera if you're going to do YouTube, a phone if you want to shoot some videos. You don't need to be spending a whole lot of money right now on the business, and conversely, you're not going to be taking a whole lot out of the business. And as I mentioned before, hopefully at this point you have another job or some savings that can tide you over until you reach level 2. Kind of like I need a little bit of coffee to tide me over because I'm a little sleepy right now. We're still going with the Portuguese glasses. Do not have a whole lot in terms of mugs yet, so those are still in storage back in North Carolina. They didn't come on the pallet. You know, the one thing about Portuguese coffee is it's very short. They don't give you a whole lot in the glass, and that's just the way it is, I guess. But it sure does taste good. All right, so let's talk about level 2. If you're at level 2, you're making up to about $50,000 per year in net profit. And if you're keeping track at home and you're good with numbers, then you know that that's probably about $4,000 per month. Again, we're talking about net profit. We're not talking about revenue. You might be making more money than that in revenue, but we always have to be thinking about what it is that is your net profit. How much money are you actually taking home from the business? Because you could be making $1 million a year in revenue, but if your expenses are also $1 million, then you're not taking home anything. So it's important to understand the difference between revenue, which is the amount of money that you're actually bringing in, and profit, which is the amount of money that you make after you pay all your expenses. Now, at this point, if you're at level 2, you probably don't need an S corporation, but you're getting to the point where you might need an S corporation. And so as we're looking forward from now until the end of the year, if you're not an S corporation yet, or if you haven't even filed your LLC yet, that's okay. You can go ahead and file your LLC, make it effective January 1st, and then you can go ahead and start that S corporation during the first 75 days of 2023, if that's what you want to do, if you're at this point now. Now, if you're already an LLC, but you don't have that S corporation formed yet, again, that's okay. I probably would wait at this point until next year to go ahead and form that S corporation. The reason being that when you're setting up that S corporation, you know, you're talking about a lot of expenses. You've got to pay for an accountant. You've got to do another separate tax return. You've got to start running payroll. All these things are going to bleed money out of your business. Now, if you had a huge year financially and you think it makes sense to set up that S corporation, then you probably could still do it this year. Although, as I record this, it's the middle of November and we're getting very close to the end of the year. And so deadlines are coming up. You may not be able to get it in on time, but talk to an accountant and see if that's still possible. Now, I told you I was going to tell you what my system is for deciding how much to pay yourself. So let's run some quick and dirty numbers, and you can use this and you can put this against what you're actually doing financially and see if you're in line or maybe not quite in line. But basically, here's the general idea. Let's say, you know, we're talking about that $50,000 number and that's net profit. Well, let's assume that you actually made, you know, $71,500 in revenue during the year, and your expenses were $21,500, leaving you with net profit of $50,000. How exactly are you going to split that up, and how are you going to decide how much that money you should be paying yourself? Now remember, I use profit first in my business, so I'm going to be using the profit first numbers to calculate how much to set aside for your owner's pay and how much to set aside for your profit and how much to set aside for your taxes. Because if you're following profit first, you should have 4 accounts minimum in your business. You're going to have your operating account, which also is where you pay all your expenses out of. You're going to have a profit account, which is where you add your profit to, just like it says. You have your tax account, which is where you deposit your taxes that then you remit into the IRS or to your state taxing authority. And then you also have your owner's pay account, which is what you pay yourself out of. Now, if you made $71,500 this year in revenue and you had, let's say, $21,500 in expenses, that should leave you with about $50,000 left over. And the way I would divide this up is I would take roughly 15% of that money, and that's going to be $11,000 or $900 per month, and I would set that aside into your tax account. Now, the way you're going to do this in reality is each month, at least once a month, maybe twice a month, you're going to run these numbers on your income for the prior 2 weeks to 4 weeks. And you can actually create a spreadsheet. I'll include a link down below to my Profit First spreadsheet. And what you can do is you can plug in the income numbers that you had for that 2 week or 4 week period, and then it'll calculate exactly how much you need to deposit into each of these accounts. And so you're going to take that $11,000, let's say, if you had a really great year and you haven't spent anything other than the $50,000 that's sitting in your operating account, you'll take $11,000, you're going to deposit that into the tax account. I would recommend you set aside a minimum of 15% for your profit account. And if my math is correct, that should be $5,500 per year or $400 per month. And that money will go into the profit account. And then finally, you've got the owner's pay account. And so if you've already taken out the expenses of $21,500, then that should leave you roughly $3,000 per month, around $36,000 that you can pay yourself as a salary. And that's a little bit less than 50%. It's around 45% of the total revenue from the business. Obviously, if your revenue number is a little bit higher or a little bit lower, you're going to need to adjust these calculations. And then, like I said, at the end of each month or maybe twice a month, you're going to run these numbers and determine how much you need to deposit into each of these individual accounts to account for your taxes, your owner pay, and your profit. And then of course, what you'll do from there is you're going to take and write yourself a check or use a payroll provider to issue a salary to you that will come from your operating account, deposit that in the owner's pay account, and then write a check from the owner's pay account to your personal account. Personally, that's what I do. I pay myself a set amount of money each week from my owner's pay account to deposit into our personal checking account to pay for groceries and bills and things of that sort. And then at the end of each month, I take a larger salary that I deposit, and then I run the bills for the entire month for our household off the money that I pay myself from that salary. So that's kind of how we do it. That's my system. If you're with me so far, leave a comment below and let me know that you're kind of getting what I'm talking about here. I know this stuff can be somewhat confusing. So all this talk about taxes is making me a little tired and a little hungry, so I've got an idea. So one of the nice things about living in Portugal is you can walk down the street and get a croissant, and that's what I'm gonna do. I love, you're hungry. Now the dogs are all awake. But let me show you what I got here. Usually, they're fresh out of the oven. First thing in the morning. Oh, that'll wake you up. I've had croissants all over Lisbon. There's a little place right next door to us. They make the best of them. Perfect little mid-morning snack. Let's move on to level 3. Now, if your profits, not your revenue, but if your profits exceed $50,000 per year, now it's time to start talking about an S corporation. Now, if you've just formed your LLC, you have 75 days to elect that S corporation tax status. Or if you're moving into a new tax year and you want to change your status to S corporation for that year, you have until March 15th to do it. There are some late filing, late election procedures to follow if you are past that 75 days. But for purposes of what we're talking about today, I think it's just important to know you've got 75 days from the date that you file your LLC or 75 days from the beginning of the tax year, which is March 15th, to elect that S corporation for the year. Now, to take advantage of that S corporation, you need to pay yourself what's considered a reasonable salary. And what is a reasonable salary? It's the salary you pay somebody who's doing your job as an employee of the business, not as the entrepreneur of the business. So you as the entrepreneur are entitled to also take a profit distribution, but also as the entrepreneur, most entrepreneurs want to get to the point where they're no longer working in the business. So if you were to replace yourself with somebody who is doing your job, then how much would you pay that person to do the job that you're doing? So for example, with me in my law firm, which is an S corporation, if I were to pay an attorney to do the job that I am doing as an attorney in the law firm, how much would I typically pay that associate? And that's the amount that I would pay myself as the lawyer in the business. And I have a number in mind of what I would typically pay an associate. And so that's what I pay myself as a reasonable salary in the business. Now, typically this can be anywhere from 30 to 35% of the revenue for the business. Where this really comes into play and where the numbers are going to change are when the revenue numbers for your business start to go up. Because as they go up, the amount that you're going to pay yourself as a salary is likely going to go down as a percentage of the total revenue of the business. Because an employee would not make that much more in proportion to if the business went from $500,000 to $1 million in revenue, your employee is not going to make double that amount as their salary. So this is where you have to pay yourself a reasonable salary in the business, and then you take your profit distribution at the end of the year. The main benefit to doing it that way is the profits are not going to be subjected to self-employment tax, which is roughly 15.3%, whereas the amount you pay yourself in salary is, which is why you have to pay yourself that salary, and the IRS is not just going to let you get by not paying a salary at all and taking pure profit. Now, a lot of people have questions in terms of how and when do you take this salary. Now, that's completely up to you. You can do it once a week, you can do it twice a month, you can do it once a quarter, you can do it once every 6 months, you can do it once a year. It really doesn't matter. What matters is at the end of the year, that you received a W-2, and that W-2 shows that you have actually paid yourself a reasonable salary for the business. But to be honest, the cadence is really up to you, and most of the payroll providers that you're going to use will charge you based on the number of times that you run payroll. And so if you pay yourself once a month, which is what I have typically done over the years, then that's how many times that you're going to be charged for payroll for that payroll provider. And you might be wondering, well, wait, Jim, what if I need to make money more than once a year? How does that work? Well, the way that works is you are still allowed to take advances against your owner draw. So you can take advances, whenever you need that money. So like in the instance of what I said that I do is I'll take an advance once a week. Every Friday, I write myself a check, deposit it into our personal checking account to use for personal expenses. And then at the end of the month, we take a salary. Or if you decide to do that at the end of the year, what's typically happening with that year-end payroll is you're telling the payroll company how much you paid yourself over the course of the year. And what they're really doing is they're withdrawing all the money that you would owe in taxes for the amount of money that you took in advances and withdrawals. That's completely fine. That's the way that system works. You just need to understand it's not the same as when you're an employee of a company and you're taking a check every other week. When you run that payroll in December, chances are it's going to be a taxes only payroll where they're just going to be deducting all the money that you would have owed in taxes for the year, which is why it's important that you're socking that money away in that tax account every month or every week or however often you decide to do it, to make sure you have that money available when you run this taxes only payroll at the end of the year. Speaking of payroll providers, my favorite payroll provider out there is Gusto. I'm going to include a link down in the description below to hawthornlaw.net/payroll. And if you sign up with Gusto and run your first payroll by the end of the year, you're going to get a free Visa gift card sent to you that you can use to spend on whatever you want, and just in time for the holiday season, use that to purchase some gifts or whatever you might need for your family. So a link down below to that, and I've been using Gusto for a number of years. They make it super easy to run payroll. They make it super easy to onboard your employees, and they can oversee your benefits and do all sorts of amazing things for you, and they're perfect for online businesses. Thank you so much for watching today. If you'd like to hear more about how to make sure you're paying yourself and operating your LLC correctly, I'm going to do another video right here that talks about all those things. We will talk soon. Have a great week, and I'll see you in the next video. Take care, folks. Bye-bye.